Welcome back to Newslink. Now, Finance Minister Enoch Godongwana will be walking a tightrope as he delivers his budget speech today. It comes amid a lackluster economy ahead of national elections. But business anchor Rupia Madzena is at the Cape Town City Hall and joins us live now for the very latest as more anticipation grows around what Minister Enoch Godongwana will actually table at his budget speech. Rupia, good to have you back. I mean, what's the latest on the ground? And I'm sure very much anticipation growing on the ground ahead of that budget speech.
A lot of anticipation indeed, Jamila, and a very good afternoon to you and our viewers from a very windy Cape Town. Yes, it is a lot of anticipation that's come out of many stakeholders that are watching very closely to see what the Finance Minister is going to do with a very limited budget. You need to understand, Jamila, that our budget is really strained. It's quite windy here in Cape Town, but our budget is quite strained because of the interest that we pay on all our debt, which is fast reaching almost a quarter of the national budget. So almost a quarter of the national budget is within the next 3 years, if not managed properly, going to be part of that national budget in its totality. And that's a huge problem, Jamila, because you've seen the public health sector, safety and security, and other important departments like education needing more financing, but also social issues as well, like the social relief of distress grants, the national health insurance, many things that the minister has to contend with. And then above and beyond that, this ailing SOEs, with Transnet seeming to be the SOE that has got its hat in hand approaching the National Treasury for some financing. But I'm going to extend this discussion with Reza Ismail, who is from Prescient Asset Management. Thank you very much for joining us, Reza. And let's start with the medium-term budget policy statement that was shared by the minister in November last year, and the actual performance versus what it is that he had described to the nation.
Thanks very much for having me. Yes, and if we were just to speak briefly, then in terms of the expectations that were outlined at the time of the MTBPS, what we'll find is very likely that the revenue line will very likely undershoot. In other words, the receipts that they get from tax collections will very much undershoot relative to the levels that were expressed at the time of the MTBPS. At the same time, you're sitting on the other side, if you want to call it the government's income statement, where on the expenditure line, I mean, that line is expected to have expanded. So the kind of dynamics that Minister Enoch is basically faced with, and the challenges that he's basically going to be faced with, is not a new dynamic. I would almost venture to say this has been the kind of dynamic that has almost plagued the fiscus for the better part of a decade, right? Where you have underperforming and anemic growth, leading to poor tax receipts, and you have an ever-expanding expenditure side of the fiscus on account of two seemingly immovable objects, the one being debt service costs and the other one being sort of an expanding sort of public sector wage bill. So the dynamics challenging as ever, and it will be quite interesting to see the kind of measures that get addressed today, and more pointedly that it get addressed in the context of it being an election year.
Yeah, Reza, are there any discrepancies in this particular national budget that we should look out for, and perhaps some of the variations that we might find there as well?
So I see that the one in terms of looking at let's start with perhaps market expectations. I would think that an almost market-friendly budget would be something that has no material step change to the amount of weekly bond issuances that come to market, right? In other words, debt issuances should be kept where it is. That should not be increased. I'm talking about from the perspective of market friendliness. The second thing is that there should be no measures to basically increase something like an income tax, right? We know that the burden of income tax is borne somewhat disproportionately by the more affluent segments of the population, but that is also the segment that is most able, the most upwardly mobile segment. So simply put, if we increase the marginal rate of tax, the upwardly mobile will simply move to a more favorable tax jurisdiction. So we don't want to see an increase in income tax. We don't want to see an increase in the weekly bond issuances. And so that leaves very little levers to pull in terms of the other kind of funding mechanisms at the disposal of the minister. I mean, one possible way to sort of get around that is to perhaps not adjust the tax brackets for inflation. In other words, to just allow yearly salary increases to find their way better into state coffers because of unadjusted brackets. So that would be one way. And then there's also something which relates to almost the VAT rate or value-added tax that could be looked at.
Yeah, I mean, it was indicated that a value-added tax could add about 24 billion rand to the fiscus if initiated by the minister, but we'll see if that happens. If we take a look at the revenue component and the revenue collection component, what are we seeing here in terms of any shortfall and its contribution to the overall fiscal health then?
I mean, the underlying reasoning here, and I mean, this has been sort of a dynamic that has been in force, in play, for, as I say, for the better part of a decade, is that we don't have healthy, real growth here in South Africa. So I use real in a technical sense, in the sense that we don't have inflation-adjusted growth in South Africa. So that, because we don't have healthy inflation-adjusted growth, that is a direct feed through to consumption. So we don't have the requisite amount of consumption, and therefore we don't have the requisite amount of tax receipts. And so inevitably what happens is that you have an undershooting kind of dynamic on the revenue side, and that has to be borne out by an alternative funding mechanism. The money must come from somewhere. If it's not coming from tax receipts, it must come from the bond market, right? And that is really a dynamic that we don't want to see. So there's two elements to sort of the tax dynamic. The one is that we simply are not consuming enough. There's not enough sort of tax receipts. The other one is also the efficacy and the sort of the collection, the efficientness or the efficacy of the collection mechanism by SARS, right? Now that has sort of improved of late, but still nowhere near sort of the levels of efficiency that we sort of need. So it's tax efficiency, the efficacy of tax collections, and also the absolute number of tax receipts that needs to be improved to get us onto a more stable footing.
Yeah, Reza, I hope you can answer this for us because it's really interesting. You mentioned going to the bond market for that extra revenue, if not taxes. But what about accessing the FX and gold reserves, which is something that's been talked about? What do you think about that? If it's a good mechanism, particularly because it's a short-term mechanism?
I think I've been hearing two sides of things. The one side, those that are more bullish about actually tapping this reserve, is those that basically have the argument that, well, it's Treasury's money in any case, right? You know, so that's the one argument. What I think those arguments is effectively miss is if we look at that sort of acronym GFECRA, I think it misses the idea of the C in that acronym. So basically, it is a contingency reserve, right? And so there is no, whilst there's no sort of correct amount that level should be sort of pegged at, there certainly is a prudent amount, and that prudent amount is basically not zero. In other words, it would not be prudent for that account to be run down in its entirety, right? You know, so if it were to be the case that that particular contingency reserve account is tapped for the sole purposes of lightening the debt burden or for improving the general trajectory of the debt dynamics, then that is good, and that would be a market-friendly sign, right? But however, if that were to be drawn down simply to plug sort of current expenditure gap, you know, and that would be less favorably received. And I think it also sets a very weak precedent in terms of the kind of fiscal discipline that we're trying to engender and trying to foster. If it's the case that there is this pot of gold that we can almost tap into at will, which lessens the need then for the kind of fiscal discipline that we require. So a good thing if it's used to lessen the debt burden, not such a good thing if it's just used on a blank canvas type of basis.
Blank canvas, like bailing out SOEs, which you've seen with the likes of Eskom.
Precisely.
Reza, thank you very much for your time. That is Reza Ismail joining us this morning just before midday, Dumelo, just speaking to us about really just how market-friendly this national budget would need to be, and really just the sources of revenue that the minister might have at his disposal, if not higher taxes. And it's very critical to look at that, Dumelo, because you've got the election year and you've also got consumers and households that are very strained, and any higher taxes could be quite detrimental for those that are literally hanging on by a thread. So a very important conversation there in terms of the alternatives that government can pursue apart from taxes. You heard going there to the bond market, which is always a good one because South Africa's always had a favorable interest rate, but also there the contingency reserves, which as Reza says are as a contingent measure and not meant to be filling gaps where absolutely desperate. And as we see with us, desperation usually means bailing out the SOEs. But let's get some more political party reaction. We've got Nkosi Mzamo Buthelezi, who's an MP, an IFP, a deputy president.